Good afternoon. Good morning, everyone. Thank you for joining us. Give us just a minute here to allow everybody to get in the room for our program today. As people are entering, I'm just going to let you know that we are recording this session so you can go back and review this information and share it with other board members or finance committees as needed. Think we've got everybody in, so we'll go ahead and get started. My name is Crystal Wallace. I'm Senior Vice President of Membership and Chapter Relation, and today's program, our Chapter Knowledge Series, is on audits, reviews, and internal controls. And we have two of the members of our auditing team joining us today, Glenn Miller and Adam Kaczynski, who will be talking with us. We also have with us today Vishnu Sharma, who is CAI's President for 2023. And also a CPA and educated business partner member. And Bruce Townsend, our CFO, and Meredith McCurry Webb, who is our Director of Accounting, are here as well today. So Glenn and Adam are going to start us off. Before they do, I wanted to let you all know in the audience today, please feel free to raise your hand if you have a question or put your question in the chat. We'll be monitoring the chat for questions and let the speakers know so that we can address those through the presentation. And then we'll also have an opportunity at the end for Q&A. So with that, without further ado, we'll get started. I'm going to turn it over to Glenn.
Great, thank you, and hi everyone. And just maybe as a little bit of background on Adam and myself, we're with Wegner CPAs, and we work with over 500 nonprofit organizations providing audit review services. So I was very pleased for the opportunity to come and talk about our trade here a little bit today. And as Crystal alluded to, really hope it's while it's set up as a presentation, we're definitely hoping it's more of a conversation. As those questions come to mind, please share them in the chat, and Adam and I would be happy to address any questions that you have related to our topics. I'm gonna start out and talk a little bit on the next slide is a little bit of maybe a little more on the agenda. I'm going to hit the first item discussing the differences between audits and reviews, and then Adam is going to look at best practices and give maybe a little introduction on what internal controls are, and then share with you some best practices that we think are relevant for really everyone on the call here today. So an audit is where you hire someone like me, a CPA, to give an opinion on your financial statements, that they're being prepared in accordance with generally accepted accounting principles. To do that, we gather different audit evidence regarding the amounts that are shown in your financials. So just stopping there is if you're internally keeping your books on QuickBooks, let's say, I'm guessing a lot of the chapters are using a platform like QuickBooks. As an auditor, or if we were doing a review, we're going to come in and take a look at that information and audit it to make sure that it's in accordance with generally accepted accounting principles. And then typically what you'll see the auditor do, the person doing the review, is then we'll put it in the form of financial statements with footnotes and that sort of thing. But we're really taking your numbers and making sure that they're fairly stated. And I think that the next ones here are some pop-outs on the slide that shows some of what we feel are some of the key concepts with an audit. And actually, if we could, yeah, there we go, perfect. So the important thing here, which Adam will go into in much more depth, is in an audit engagement, we're gaining an understanding of the chapter system of internal controls, walking through and testing those controls. And Adam will have a lot of detail and information on that. But really it's the checks and balances, the segregation of duties. That's when we see something go wrong in a nonprofit, it's usually because there wasn't an internal control or it wasn't being followed by the organization. We don't look at everything in a review or an audit. So we assess risk of misstatement or fraud within the organization and then design our procedures accordingly. So as part of the audit process, the audit team gets together, assesses risk, and designs the audit based on those perceived risks. And some other things that we do, let's say cash account, investment accounts, we may send confirmation to third parties such as your bank or investment provider to provide that independent verification of account balances. So really digging in and and looking at things in pretty deep depth. Continues on the next page, and in testing of transactions, account balances. For example, in a chapter, one of the things that we may want to do is, there's 30 there's 30 members in the ABC chapter. Dues is X dollars. We're going to take a look at, get into that level of depth and try to drill down and make sure what you're showing as dues income is being fairly stated. In an audit, we look at your board of directors meetings, we read those, we're looking for things that might have an impact on the organization and its financial statements. We interview chapter personnel and governance. So let's say you're maybe a larger chapter that has staff. We might talk to the executive director. If there's another support person that's involved in the organization, talk to him or her. And then we would also interview somebody at the governance or board level, treasurer and or president as part of the audit procedures. And then ultimately what you pay us to do is to give an opinion on the financial statements, where we're going to say in that opinion that that your financial statements are prepared in accordance with generally accepted accounting principles, which is the highest level of assurance that we can give on the financial statements. So it's a pretty deep dive where we're getting in and analyzing, looking at a lot of things. And in just a second, I'll contrast that with what a review is. But I'll just pause there, Crystal, to see if there have been. I haven't seen any questions, but if there's anything on that part, I'm happy to pause here.
Thanks, Glenn. I don't see any questions yet, but if anybody has a question, feel free to raise your hand so that we can identify you. Any question on what an audit is? Okay, I think we can move on to the next item.
So the next step is what is a review, and so I talked in terms of what an audit is, and maybe here I'm going to say what a review isn't more so. Now I don't talk about myself as an auditor anymore. I'm back to being an accountant, and we're performing inquiry and analytical procedures, and purposely bolded those on the slide here. And we're expressing not an opinion, but limited assurance that your financial statements are in accordance with generally accepted accounting principles. So inquiry and analytical procedures, what am I talking about there? An inquiry would be something like, does your bank reconciliation agree to what shows on your financial statements? I get a yes, I move on. That's my inquiry that I'm required to do in a review environment, versus in an audit, I need to verify that information. The same thing in getting into analytical procedures, looking at things, my expectation coming in to audit your chapter, do a review on your chapter would be, generally from year to year, your membership probably doesn't change a whole lot. if we saw that membership stayed relatively consistent, we know there wasn't a dues increase, we might be done there. Versus if your membership was double what it was last year or half what it was last year, that analytic would require us to follow up with questions on why that might have happened. The client would then give us a response that we deem satisfactory, we move on. Versus in an audit, we're going to verify that information. And contrasted to an audit, in a review engagement, we don't look at your internal controls. We don't test or walk through your internal controls. We're really doing that inquiry and analytics. We're not looking at fraud risk within the organization. We don't typically examine a lot, if any, supporting documentation. No testing of account records, observation. We're not sending confirmations. And mentioned before, we look at board minutes in an audit engagement. We typically wouldn't do that in a review engagement. We would just ask you questions that, if anything occurred at a board meeting, that might have an impact on the organization or its financial statements. I kind of like this one. The next slide actually really helps me kind of put this in perspective. And I use both my sons in the example. Not that that's relevant here, but if my son Jordan told me he was going to his friend Corey's house, if I call Corey's mom and ask if Jordan is there, that's a review. I did an inquiry procedure. But if I drive over there and verify that Jordan is at Corey's house, that was an audit procedure. So obviously there's more effort involved in an audit than there is a review, and accordingly then it's a higher level of assurance that we give when issuing an audit opinion versus a review report.
Glenn, I love that. I'm going to have to definitely use that when I do presentations in the future, because that brings it out so crystal clear, the difference between a review and what you're actually doing. Because if I got to drive over to the house versus a phone call, it brings it in. That's perfect. Love it.
Yeah. Thank you. I wish I had more great examples like that, but I'm pretty much tapped out with that one. But and then finally, just the one thing what's come up, and we have talked with a couple of the chapters on costs and other things related to the fees associated with the different levels of assurance or engagements. And it's hard for us to really give you could have a very large chapter with a lot of complexity, and a smaller chapter. Both may need an audit, but the prices could be significantly different. It's all, our business is really figure out how many hours, who's performing the engagement, put their billing rates attached to that, and that's how we come up with a proposed fee. But I think can generally say that the price of a review is typically about 50% of the cost of an audit. So audit's $10,000, a review would be in that $5,000 range, something along those lines. And that's just a rule of thumb. There can be some differences there. But that's a quick run through between an audit and a review. Vishnu, I'll pause. Anything I may have not touched on that I think is relevant, and then certainly any questions from anyone on the call.
Hey, Neil, thanks, Glenn. What I'd like to just do is just thank everybody for attending today, and thank you and Adam for taking the time to do this. This is brilliant. Having the opportunity, as being part of the audit committee and working with you guys on the audit for CAI as a national organization. I mean, it's great being both a CPA and a certified fraud examiner. I mean, I get this and I understand the value and the importance to it. When the board of trustees worked and with the chapter group to make sure that we could go ahead and have the standard and put this in place, it was recognizing the scale and the scope that CAI has become with 64 chapters across this country. 61 actually in the US, 3 overseas, and becoming a national organization, an international organization we have. Reputational harm is super important, and important to understand that what goes wrong in one particular chapter, the only name that comes out is CAI. It's not CAI for whatever particular chapter. And we, as we become even larger and more respected, as we've seen and Tom has made really clear the last couple of years since Surfside and all the changes that are going through the industry right now with structural and reserve studies and things like that, our name just keeps getting grander and bigger, and we become more relied on by legislatures within states to rely on the product that we put out, and that product has to be bulletproof. And this concept of creating some type of independent financial verification at the chapter level, we tried really hard to make sure that it was not onerous. Nobody wants to go through the process as an auditor review. I get it. Spent most of my practice on the audit side as well. But by the same token, we felt that by putting the standards in place on the audit and the review as far as the dollar amounts, and then making a requirement to only once every 3 years, that at least allowed us to have some visibility without it being punitive to the individual chapters. So just happy for the opportunity this is getting kicked off and we're moving forward with this. And I'm going to turn it back over to you, Glenn. Thanks so much.
Thanks, Vishnu. Before I turn it over to Adam, Adam's going to walk through some examples of internal controls. Just as a reminder, that's the audit concept. But regardless of if your chapter has an audit or doesn't have an audit, the takeaway I think from Adam's presentation today is these are the sorts of things that all of the chapters should give consideration to implementing within the organizations to protect not only the assets and the integrity of all of the organizations, but to protect the people that work in the organizations. There's an old saying that you don't want to let good people do bad things, and that's why we have internal controls in place in every organization. So, not seeing any questions, I'm gonna turn it over to Adam and to talk about internal controls.
One second, Adam. Let us get the slideshow back up. We had a little technical hiccup and we're taking care of it right now. Okay, Grace is going to share in just 1 second if you want to go ahead and get started.
Awesome. Well, good to see everyone. And as Glenn mentioned, I'm going to touch on the internal control side of things. And yeah, not to copy what Glenn just said, but this is important. Even if you don't have an audit or a review on an annual basis on things to consider, because on internal controls, Glenn mentioned that from a cost perspective, it's about 2 times the cost from an audit to review. And I think probably somewhere between 1/3 and 50% of what we do on the audit side is gain an understanding of these internal control processes, because they are important not only to your financial statements, but just from an accountability and safeguarding assets at your chapter. So, I promise I'm not going to read the whole thing word for word off the slide. I think it's very helpful, these first 2 bullet points to touch on. But what are internal controls? They're the mechanism, rules, and procedures implemented by a chapter to ensure the integrity of financial information and promote accountability and prevent and detect fraud. And so what does that mean? As Glenn mentioned earlier, a lot of you are likely using QuickBooks. And so I look at this in kind of 3 different lenses. Internal controls help make sure that those financial reports that you're generating out of QuickBooks are fairly presented in accordance with generally accepted accounting principles. But I think for this discussion, more importantly, it's making sure that all the revenue that each chapter is entitled to is accurately captured in your financial statements, as well as the expenses are accurately captured in your financial statements. So making sure that 1, everything that you're entitled to is being reported in the financials, revenue side. And then on the expense side, anything that's appearing as a disbursement is actually truly an expense of your chapter. And, how do we ensure that happens? It's implementing those internal controls. And there are 2 different types of controls that we typically focus on, and that's your preventative controls and your detective controls. Those preventative controls being the ones that do just that, prevent someone from pushing something all the way through a transaction cycle and not have it go corrected or detected or fixed by someone else. Likely for most of the chapters on this call, that may be difficult, just given small staff size, more volunteer heavy based organizations. And that's where the detective controls come into play, which we typically see with a lot of the nonprofit organizations we work with. And I'll provide examples on the next slide, but these are the controls that, maybe something bad could happen, but there are mechanisms in place to catch that in a timely manner. And Grace, if you can I think there's 5 bullet points here. Oop. Perfect. So the 5 bullet points listed here are what we consider on substantially all engagements that we work on from an audit side. And I think they're very important for you all to consider as well. These do tend to blend together with one another. And I'll go through these and provide some specific examples of preventative and detective controls of each. But just to summarize, cash receipts, we're referring to monies coming into your chapter. Cash disbursements and payroll, those are monies going out through your expense transaction cycles and your payroll transaction cycles. And I'll group bank statements in with all 3 of those. And then there's the technology controls to consider that focus both on that internal controls, but also the external protection for your chapters as well. And we do have a link embedded into the presentation that provides some best practices that we recommend for nonprofit organizations. So the examples I have are by no means all inclusive, but just some that we pulled from there. On the cash receipt side, this is one where, I'd say majority of our clients aren't necessarily thinking through the fraud risks when it comes to monies coming into the organization, where we can commonly see sometimes there's a lack of controls there or just not sufficient controls there. And one way on the preventative side to ensure all money coming into the organization is being accounted for and reported appropriately that we like to see is the dual opening of the mail together. So Glenn and I sit down and open the mail together when it comes in. That way we can restrictively endorse a check received for deposit only, and then the other one can log the check in a check log. And from there, that gets reconciled with the bank statement, which gets reconciled with your accounting system. The important part there is that restrictive endorsement and in the presence of one another, because once Glenn restrictively endorses that check, there's not a whole lot he can do with it besides put it in the chapter's bank account. And 2, if he decides to steal it, let's just say we weren't restrictively endorsing, and word comes out that Vishnu's membership dues check got stolen, I can say, hey, I know Glenn opened that with me and I don't have it. He probably has it. So there's that kind of control on the front end. Other controls to consider here are relying a little bit heavier on e-commerce. So encouraging payments through your website or credit card portals. And that's where technology comes in a little bit. And I'll touch on that later. Then also just other, third-party mechanisms, working with your bank to implement a lockbox, or maybe having a traveling mailbox where a third party's processing the mail for you, depositing checks into your account on your behalf. And those are more of those preventative controls.
Hey, Adam,
yeah.
I have a question. Some of our chapters are small that they only have one staff person. And so how would you recommend that they handle a process like you were just speaking of, where you're opening the mail and documenting that information together?
Yep, that's a great question and a perfect transition to where I was going with that, because that is difficult. So there's a few things. One, I'll get to that in a sec, because sometimes what we will see is maybe it's just 2 people at the organization, and let's say it's a remote organization. Now that we're in a hybrid virtual world, where Glenn's going to open the mail by himself and go through the process. Let's say he's doing the right thing, restrictively endorsing checks, creating a check log, giving it to Bruce to record in the financial statements, whatever the process is. I think at that point, it's important to have some mechanisms in place to limit Glenn's ability to, manipulate the invoicing system. So if Bruce is sending an invoice for membership dues, making sure that Glenn can't necessarily apply that payment to the dues database. The thought process there is that if he takes an incoming check, cashes it for himself, at that point, he's $250 richer, or whatever the number is. The member thinks they have paid, but then when Bruce follows up and says, "Hey, Crystal, where's your dues payment?" You say, "Hey, I cashed it on." It shows that you cashed it on April 12th. What do you mean? There's that back-end detective control. Now, to your question, though, with maybe we have one person, that's one where it's probably hard to implement a specific control if you're truly receiving a significant amount of physical checks. I think that's where it's important to encourage those e-commerce payments and whatnot, or some of those other banking options. I'd say with a lot of the organizations we work with where it's volunteer heavy or just one person heavy, it's not uncommon for us to issue a significant deficiency over the cash receipts process, which if we're in that significant deficiency realm, doesn't necessarily preclude us from issuing that clean opinion that Glenn mentioned on the financial statements, but something that we still have to report on, that something could happen in the financials. And I think the overarching thing here too, especially with small organizations like the chapters, is that there is a cost benefit analysis that you have to go through as you think through all this. And I think that's important from both a management level and a governance level, where, yeah, we want to have a clean audit and we want to have, the best internal controls in place, no deficiencies. But if it means incurring $10,000 a year, I'm making that number up, to implement a lockbox system because only Crystal's the only one opening the mail, does it really make sense for us to do that if it's just to get a clean, no deficiencies in our audit? So that is one thing to highlight here, where there's that cost benefit analysis to go through with internal controls.
That's great information. Thank you, Adam.
Can you go back to the last slide? Thank you. And the next three bullet points are all very similar in my mind. The cash disbursements and payroll transaction cycles, and banks, as well as bank statements, and focusing on those reconciliations. Segregation of duties is on the preventative control side, is making sure that implementing controls to make sure someone can't process a transaction throughout the whole cycle. So not entered into your accounting system, cut a check and pay the amount as well. And so in a larger organization, that's easier to separate those duties, whether it's through cutting physical checks, or if you have a system like bill.com to implement and hit various permissions that would prevent someone from doing that. But again, going back to the small one-person operations, I think that's where it's important, where if it's a board member, so using as an example here, if the treasurer is the one who's charged with processing all financial activity at the organization, engaging another officer such as the president to provide some monitoring or oversight, that detective control over them, and that being reviewing bank statements, bank reconciliations, financial reports, and I'd say also too, check images. So, I know not all bank statements include check images anymore, but generally speaking, banks will allow you to have a read-only user log into the bank account, or maybe both the president and treasurer are signers, so they can log into the account and review the check images to make sure that, yes, Wagner CPAs was paid $7,500 for XYZ service, and it wasn't really going to Crystal because she manipulated the accounting system. So that's where the back-end monitoring can be very important in a small organization. And then finally, from a technology standpoint, thinking on the external fraud risk areas, I think pretty much every client that we've talked to over the last 2.5, 3 years is getting hit daily with cybersecurity issues, whether it's phishing attacks, ransomware attacks, and so forth. So just having the bare minimum, antivirus in place, and firewall protections, document retention policies, disaster recovery plans, and so forth. but then also considering cyber insurance and just cybersecurity trainings on an annual basis to stay up to date on the latest schemes, because we've certainly seen not only those potential attacks happen on our end, but actually clients lose hundreds of thousands of dollars due to cyber attacks recently. So that's very important from an external prevention standpoint. And then on the internal side, just making sure that people only have access to what they need access to implement some sort of segregation of duties within your control systems. So with that, I don't know if anyone has any questions, or Vishnu, if there's anything that you want to highlight or emphasize here on your end.
No, I think this has been great. Just, on some of these internal controls and things like that, I think just the understanding, I think, Adam, that certain of these apply really to an audit and a review. I think the majority, I think, Crystal, when we looked at it, the majority of our chapters are going to fall within that review criteria. Some of the larger chapters will definitely be in the audit side, but some of these criteria that we're looking at or work product that'll have to be delivered are really based upon an audit versus review.
Okay. Any questions from the audience?
I have Chris, can I ask a question real quick?
Yes, please do.
Yeah. Adam, thanks. Great info so far. I run two chapters. One would require review, the other one an audit. And I'd say over the last year, maybe 2 years, I've seen an influx of invoices come in through things like Cash Apps or Venmo, PayPal. I guess what are some, and I'm sitting here thinking, am I doing that right? What are some best practices in terms of, kind of new technology, in terms of invoicing payments that are being made? And a lot of what the vendors we work with, it seems like, on the entertainment side, or whether it's like photo booth operators or bands, they're invoicing us and, here's my handle. We're making payments through that platform. I don't know if that's a good thing to do or not. So I'm just curious what you might be able to provide for us.
Yeah, I think the important thing is that you're just thinking what we go through with our cybersecurity on our end, where kind of down the same vein where is this expected? So Glenn sends me a request to pay him via the invoice via Venmo. I'd likely make sure that that's expected. Reach out, give them a call, and probably wouldn't even respond to that email itself, because we have seen that get sophisticated as well, where you respond to that email and it even looks like when we've seen almost the same exact email address, and it's not that jumbled one either. Just making sure that this request is expected and legitimate by doing some additional verification on your end before making that payment. And Glenn, I don't know if you have anything to add on that.
Well, yeah, I mean, that's from the technology, that's great thinking. And hey, Jesus, I don't really see clients of any size using some of the the Venmo platforms and anything. Not that to say that isn't going to come. There's certainly, so back to, there's certainly there's a detective control ability there. Somebody could go back and look at it on the bank statement to see what outgoing Venmo transaction might have been for. We're not really seeing clients that have gone quite that far yet with they're paying things, I'll say more traditionally, whether it be a check or an ACH type bank account to bank account type. The Venmo stuff is coming, but I think if I'm receiving money, I'll take it any way you're going to give it to me, is kind of my thought. And if I'm paying it, I kind of want to follow the protocols that we've established as an organization to make outbound payments.
Can I add something to that or clarify something? So Jesus, in your example for like a photo booth, I've seen that as well, because it's a small amount, $1,000, let's just say. I would think a best practice would be to have that be in the contract up front, saying payment will be, or invoicing will be done via Venmo or PayPal or whatever, so that you can expect that. Is that, Adam, kind of what you were saying?
And yeah, and I think just what we've seen, and again, focusing more on the technology piece, where people have gotten creative in terms of, yeah, we knew you held an event, and now I'm going to request payments, and I say New Jesus was expecting payment, so I'm going to sneak in and ask for that payment as well and appear to be the vendor. So that's more on that's kind of the thought I was going down,
Okay.
Crystal.
Okay.
Hey, it's Meredith. Can I jump in too?
Please go ahead.
So Jesus, what we have started doing internally up at headquarters is, and some of the people on this call I know have have experienced this with us. If we get somebody who says we want to update our payment instructions, we're asking you guys for a copy of a voided check or a letter from our bank, because we're paying everybody through ACH process. When we're working with a new vendor who's reaching out to us, and I'll use annual conference coming up as a great example. We've got vendors who say, oh, we want to get paid by PayPal or by credit card. If we're not sure, and especially if it's the first time we've worked with them, we say, I'm sorry, we pay by ACH. We ask them for the same information, the avoided check, ACH instructions, and then we call them. We call the contact that we've been working through, and we say, we've gotten these instructions and we just want to verify them verbally. So
That's helpful. And initially, for both chapters, I was very hesitant and said no. But again, I would say it's been 24 or more requests, and it's because we use voiceovers, bands, photo booths, all these kind of random one-off small companies. In some cases, maybe upwards of $4,000, and they're vendors we've used in the past, but we have no internal control or policy that says, this is the mode of payment that we are required to use. And so I don't know, it's been helpful to hear this conversation.
Great. Thank you, everybody. Are there other questions? Okay, I'm not seeing any in the chat. I don't see any hands. All right, Adam, Glenn, actually, we have one more slide. Sorry, forgot about that. So we wanted to share with you again the requirement for the recertification requirement for chapters. The red text is what was changed in January of this year to increase the amount, the threshold for an audit versus a review. So this audit or review is due January 2024 for calendar year of 2022, January 1 through December 31st, 2022. So you'll be conducting that anytime in 2023 to be due to us with your recertification in January 2024. It's a lot of numbers, so I like to keep repeating that when I talk to people about it. And if you have specific questions about that, you can feel free to reach out to any of the chapter staff. Okay, with that, Adam, Glenn, Vishnu, any closing comments?
Not from me.
Nor I.
Great.
Here.
Okay, hearing none. Thank you all so much for participating and sharing this knowledge today. Again, this has been recorded, so we will be sharing this with our chapter leaders to view and share with their boards and their committees as needed. Thank you very much, everybody. Have a wonderful afternoon, and we'll talk to you soon. Take care.
You.